Priyanka, Tilak. Hello.
Hi, Izaka, I'm online.
Good evening, Kenneth. Good evening, Doctor.
Yeah, good evening, everyone.
Professor Nalin, I think we have everybody online. Mr. Bandaranaike, you can hear us, no?
Yes, Ken.
Thank you very much for joining. Can we check the PPT and see, sir?
Yeah, shall I?
Yeah, just share the screen and see whether it's working.
Yeah. No, you have to give me permission. I can't share.
Tarindu, can you allow?
Okay, now I can. Okay.
Right, just run it through one or two slides and see, Mr.
Okay.
Right. Okay, it's working fine. You can exit the screen, sir. Thanks. So, Professor, we are ready.
Okay. Yes. Shall we start?
We can start.
Right. Okay. Thank you.
Everybody's here.
Okay. So it's my great pleasure to welcome you all to the technical forum conducted by the Faculty of Management Studies in the Open University of Sri Lanka. So yesterday we successfully completed our first International Conference on Management and Entrepreneurship 2022 under the theme of Business Management, Innovation, Challenges and Resilience. As you know, the event was graced by Professor Philip Kotler and Professor Siabu, and we were really fortunate to witness about 70 authors and presenters making their presentation representing different territories in the world. So aligned with this conference, today we are going to have the first technical forum under the theme of Toward a New Normal, Understanding Business Opportunities. We are really fortunate to have our eminent professionals, starting with guest speech done by Mr. Rajiv Bandaranaike, Chief Executive Officer, Colombo Stock Exchange, Dr. Kennedy Zilla, Chairman, Lanka Clear Limited, Mr. Chana Gajanaka, Senior Lecturer, Institute of Sri Javadanapura, Mr. Priyanta Ranasinghe, Director, Human Services, Coca-Cola Beverage Sri Lanka Limited, Ms. Tilanka Bewardena, Chief Marketing and Business Operations Lead, SEA Emerging Market at Microsoft, and Mr. Prasanna Liyanage, Founder, CEO, The Reflections and the Training Hub Asia. And we have our own moderator, Mr. Indra Liyanage, Head Risk Management, Sripath Finance Limited. Let me introduce Indra Liyanage. He counts over 30 years of banking and financial experience and is the Head of Risk Management at Sripath Finance PLC and also a member of Council of AAD Sri Lanka and Secretary to the Board. Mr. Indraga holds an MBA from Open University of Sri Lanka and currently the President of SEMBA Alumni. He is also a Council member of SLITAD and Assistant Secretary. He is a Senior Fellow member of Institute of Bankers and is a Fellow member of AAD Sri Lanka. And also is a member of Institute of Credit Management of UK and Certified Professional Managers of Sri Lanka. He was judged the best Chief Risk Officer in banking sector in Sri Lanka in 2019 by the Golden Globe Awards. So Mr. Indra Liyanage is our moderator, and by looking at the technical forum under Toward a New Normal, Understanding Business Opportunities, actually now at the moment we need to understand we are in the crisis situation by looking at the different perspective of the country. So we always believe Sri Lanka need to practice more discipline. So people start to discuss about corruption and the discipline and better management for maybe vision for 2030. So where the discipline needed in local and global business practices, and more importantly, there's a strategic window which is opened for the countries, the temporary time period, the opportunity being created. But before window is going to close, we have to grab the opportunity in local and global markets. So we should have a proactive measurements by all the stakeholders. So in this technical forum, it's expected to discuss the strategies to be incorporated for the sustainable future. Let me again introduce Mr. Indraka Lenage to take the forum. Thank you very much.
Thank you very much, Professor, for that lovely introduction. And first of all, let me congratulate the management faculty of Open University for organizing this international conference, and it was a very colorful.
And also, Indraka, we are Sivaloga and all our
yes, I was going to address.
Okay.
Yes, Professor. So, Professor Sivaloga, Dean of the Faculty. And then I heard that Professor Tilakaratna, the VC, also might join as a participant, and he may be also in the audience listening to our discussion. So we are very much honored to have him also in the panel. As I was saying, it was a very colorful event yesterday. Professor Kotler was addressing the inauguration, and Professor Wu also was doing an inauguration, and Professor Sampath from the University Grants Commission, and there were so many other eminent personalities yesterday. And today also, I'm very much grateful for the university for putting up this panel. I think we have a very much panelists from so many differentiated disciplines. So I think it will be a very thought-provoking session today. And before we start, I think we have the initial paper presentation by Mr. Rajiv Bandaranaike. I think he's joining us from UK, and I think he's on the verge of coming back to Sri Lanka. So we are very much honored and thankful to accepting our invitation. And before you start your presentation, Mr. Bandaranaike, let me be free introduce our paper presenter. So Mr. Rajiv Bandaranaike is presently the Chief Executive Officer of Colombo Stock Exchange and taken over the CSE in 2013. He has served in several senior management capacities at the stock exchange before the present position in trading, clearing and settlement, branch development, marketing, human resources, and several market development initiatives, and counts over 23 years in the stock exchange. And he has also served as a chief executive officer of 2 listed companies and counts over 25 years of experience in financial services. Presently, he serves in many corporate chamber committees and central bank-led committees on financial sector policies also. And Mr. Bandaranaike, just to mention about his academic qualification, he holds a degree in law, LLB, from the Open University of Sri Lanka, a master's business administration from the University of Southern Queensland, Australia, and a postgraduate diploma in marketing from the Chartered Institute of Marketing, and a stockbroker certification from the Securities of the Institute of Australia. His alma mater has been at St. Thomas's College, Mount Lavinia, and I think there are so many other qualifications which time constraints doesn't allow us to mention them. So again, thank you very much for accepting our invitation. So over to you, Mr. Bandaranaike.
Thank you very much. And first of all, I must thank the Open University for kindly inviting me and giving us an opportunity to talk about the stock market in Sri Lanka at this important management and entrepreneurship forum that has commenced yesterday. So what I intend doing over the next couple of minutes is to share with you very quickly some statistics and some numbers on how the stock market has been performing, and then also get on to some challenges and opportunities, to discuss some challenges and opportunities which may be of interest to those who are listening in, and also to finish off with some other challenges that have arisen as a result of this current situation as well. So let us first of all consider and take a quick look at how the market itself has performed over maybe a 2 to 3 year period. 2021 was a absolutely record-breaking performance as far as the market was concerned. The all-share price index and the S&P SL20, that's an index that includes the largest and the most liquid stocks, grew phenomenally over that period. 80% growth in the all share and 60% growth in the S&P SL20, and I'll tell you some of the reasons why. But if you look at 2022, we have seen a decline again. And year to date, if you take 2022, due to the current environment, we have seen the all share price index actually dropped even further than 14%. As you see in the graph, it's about 23%. And the S&P SL20 has even moved back by as much as about 32%. So there is somewhat of a correction that has taken place after this high growth. If you look at even the turnover, I'm just looking at a couple of criteria. If you look at the turnover, 2021 was again a very significant year in terms of turnover. Prior to, in terms of daily average turnover, prior to 2019, we were averaging something like 700 million a day. And if you look at last year, we averaged something like 4.9 billion, nearly 5 billion a day, which is almost a 6 or 7-fold increase in the daily volumes that we did. Then even if you look at the number of transactions, again, there is a phenomenal growth in the number of transactions. If you look at 2019, the period 2019, we were doing something like 5,000 transactions a day, which increased to something like 45,000 currently. So again, significant increase in the number of transactions. And even if you look at, I'm just sharing some numbers and statistics as we go along, but I'll read them out. Another significant factor we saw happening in the last 1 to 2 years is that we have seen the broad basing of the market. For example, if you look at 2019, we had, in terms of active investors, we had a base of about 18,000 people who were active. But last year, if you take last year, there were about 63,000. So the market has somewhat broad-based and become an active liquid market after a very long time. Another significant trend that we saw recently is that we have seen a younger segment of investors also coming into the market. Traditionally, we had 80% of the accounts that were open were 50 plus. But over the last 2 years, we have seen that the trend has totally reversed, and we see about 85% of the new accounts that are being generated are coming from those who are less than 40 years of age. So there is a shift towards a younger set of investors, which is good news for the market. Another trend that we have seen is that it is geographically also diversifying. Earlier, 80 to 85%, nearly 90% was from the Western province of all the accounts that were being generated. But if you look at again the last 2 years, this 80% dependency has dropped to about 55%, which means as much as about 45% is now generated in provinces outside the Western province. So some broad basing has taken place. So those are significant developments if you look at from the market perspective. And even if the current slide that you see is about the market capitalization, which reached a record 5 trillion last year in 2021. So it's important to understand also why this happened. I think there are a number of factors. One main factor would be the low interest rate scenario which existed, and I think I'll try to show you a graph to that effect. The interest rates which dropped to single digit is one primary driver for a lot of retail investors to get into the market, simply because they had no other opportunity to invest in other asset classes except for real estate, and this being a more liquid share market. So people opted to shift from fixed income to equities, and we have seen that creating a demand locally among local investors. So the demand was driven mostly by retail investors. Maybe 80 to 85% of the volumes that we saw, which I spoke about in the last 2 years, has been generated through retail investors. And one primary reason is the low interest rates which is depicted in these charts. The second reason is also that we had very good corporate earnings despite the pandemic, the challenges that we saw in 2020 and again 2021. We saw that the resilience of the corporate sector, that they performed very, very well, and there were record corporate earnings. Aggregate, if you take profitability, there were record earnings which attracted a lot of investors also into the market. So these are some of the factors which really prompted the market to perform the way it did. If you look at our market itself, we have a history of about 35 years in its present state, but over 100 years of share trading in itself. And currently we have over 298 companies that are listed. So relatively small market, but nevertheless now got active. We have a network of 25 brokers, and the companies are fairly widespread in terms of the sectors that they represent. So different sectors of the economy are represented. Now, if you ask how well is the stock market represented, or how well is the economy represented in the stock market, well, in certain sectors, yes, in certain sectors, it's underrepresented. But the shift that we saw recently was something good, because we had a very active primary market this last year, where we had about 13 IPOs, and we were able to facilitate the raising of over 120 billion of debt and equity financing. And of that, interestingly, we saw companies, new companies coming, like technology companies like Zenith. Then we had a green energy company where they had wind power generation company coming in. So we had some interesting companies also joining in, which provided different options for investors. So as you can see, we have varied sectors being represented, from transportation to food and beverage to capital goods to diversified conglomerates to telecoms and all of that. So there are 22 business sectors that are represented in the market. So let me very quickly get into, so that's some of the numbers and the performance that we had over the last 2 years. But let me very quickly get on to some of the challenges and opportunities that we see in the market today. And I'll talk about the current crisis a little later. But overall, if you look at challenges, I think the pandemic created a huge challenge for the market. And I'll just spend a little bit of time on that. When the first lockdown really happened, as an industry, we were not, I think, totally prepared to operate the market, simply because accessibility was restricted. If you remember, there's a very strict curfew. So as a result, their movement was restricted. So we had an unfortunate situation where we had to close the market for nearly 1 month, a little over a month. And then during that period of time, what we did very quickly is to completely digitize the stock market end-to-end, to enable all the market participants also to conduct their operations online and digitally. That worked well. We did it through a mobile app. And when markets opened, and when the second wave came and we had to close again, the market was able to operate completely remotely. And I think that's a significant outcome of the pandemic and its impact to market operation. So right now, there's any person from any part of Sri Lanka, in fact, any part of the world now, can onboard themselves through the mobile app, sign the agreements digitally, get all the information, select a stockbroker of their choice, and get access to trade, and then using the banking system, the internet banking systems and the facilities offered through the banks, make settlements also electronically. So end to end, it's possible to stay from your wherever you are and then participate in market activity. So that's one outcome, which was a challenge, which we turned really into an opportunity, which resulted also, as I mentioned earlier, a more tech-savvy, younger set of investors coming into the market, because they were not prepared to go into broking offices physically, visit, sign forms, and do all of that. But once you gave them this tool, we saw a huge increase in the number of investors coming in. The second challenge is, of course, attracting foreign investments. we have seen outflows from the market due to a number of factors. And this is critical for us because we know that we need the US dollars in. And traditionally, the Colombo Stock Exchange has been able to attract a lot of foreign investment. From the time it was liberalized in 1990, we always had long-term investment from foreign, and as much as 35 to 40% of our volumes were generated by foreign individual and institutional investors, mostly from UK, Europe, and the US. Now, unfortunately, that equation has changed, of course, partly driven by local interest as well, where the foreign investment has reduced over the last 2 years in 2021. But then again, we have seen a very encouraging trend this year because due to the drop in the indices, this market ran a lot in 2021. As I know, 80% increase in indices. I think foreigners kept away because they felt that it was overheated. But now that a drop has started and there is a drop in the prices, for the first time since 2019, we have seen foreign investors now coming back into the market. And we have seen during the month of March, for the first time, there is a net inflow of 1.5 billion rupees of net inflow into the market, which is again very good news going forward. Then the third challenge is about managing the exchange rate, of course. And we know that that will either decide whether foreign investors are going to come into the market or not. And I think the devaluation which happened would have now helped to encourage more foreign investors to come into the market simply because they were waiting for a devaluation to come in because it makes it cheaper for them. So these are some of the current challenges that we face. But let me also talk a little bit about some of the opportunities. Now, let me look at maybe some of the key opportunities. One is our market is still very small in its size, so there is potential to increase the size and liquidity. Pension reforms is another key area which a lot of leverage can be made. The low interest rate scenario which prevailed was an opportunity, but we have seen the rise in interest rates, and therefore we may see investors shifting from equity to debt. Low valuations, still with the increase in prices, we still feel that some of the stocks are attractive and are relative to particularly other stocks in other markets. It's still very attractive and cheap. There's still strong corporate earnings growth. Of course, we have to see how the first quarter of this year will be. And of course, there is a lot of market infrastructure that's happening as we speak, which provides greater comfort to investors. And of course, this greater market accessibility, etc., which provides some of the opportunities. So I covered this sort of roughly. And where this relationship between the foreign direct investments and the exchange rate is very important. As you know, when there is sort of uncertainty in the currency, and you will find that foreigners will be less inclined to come in. But when there is certainty where the exchange rate is concerned and they know exactly where they stand, then you can see that some of the foreign investors will start returning. So exchange rates become an important determinant in deciding foreign investor flows in the market as well. Let me also tell you, if you look at the entire global landscape of stock markets, Sri Lanka, if you can look at the third column, Sri Lanka is classified as a frontier market. And our closest competitors are Bangladesh and Vietnam. So when we compete for funds globally, we are really competing with these two markets, Bangladesh and Vietnam. And the focus is someday to get onto an emerging market status, but we feel that we are really not prepared as of yet, because to move to an emerging markets status as classified by the Morgan Stanley index, you need to have minimum infrastructure, minimum size, minimum liquidity, etc. So I think right now we're very comfortable of being a big fish in a small pond rather than being a small fish in a big pond, because if you migrate to an emerging market status, you are going to compete with the big guns like Indonesia, Korea, Malaysia, Pakistan, etc. And we may find that we may have a very tough time to do that unless economically also we are strong. So this is our positioning, just as a means of telling you where we really position ourselves. So liquidity is a key determined again, and we have a lot of initiatives to increase the liquidity, because one key aspect of a stock market is the ability to enter and exit freely without impacting on price. And this is particularly so for large institutional and foreign investors. If you look at our market structure, if you look at 2018 and 2019, as you can see from this graph, foreign investors accounted for about 44%, local individuals accounted for 22%, and our local companies like the EPFs and the other institutional investors accounted for 34%. But you can see how the equation has changed. Local individuals and local companies now take up nearly 90%. So the equation has changed from a kind of foreign oriented investment market to a more local dominated market for reasons that I mentioned earlier. But these keep shifting, and we may see the trend shifting again. Another quick comment I need to make is also about this size of the market. If you look at market cap to GDP, so generally we measure markets as market cap to GDP ratio. Now in Sri Lanka, it's still 19%. Whereas if you take some of the other markets, they have grown phenomenally in terms of the importance of the stock market in the economy. So the upside to this is that there is potential to grow. But if you look at markets like Vietnam, India, Thailand, they have already grown, and there's like a saturation point. But if you take Sri Lanka, there is a lot of room to grow, simply because a lot of companies are unlisted. If you look at some of the largest state banks, public utilities, other companies, we have a large segment outside. We have about 20,000 companies that are registered under the register of companies. About 2,500 of them are public companies which are eligible to list. And of that, there is even less than 300, 290 odd that are listed. So there is a lot of upside, and we feel that that's an opportunity for the market really to grow. So although in size it's small, I think the biggest potential, which also will be of immense importance to government, is how state enterprises can be brought in and making use of the market, can start accessing market-based funding. It does not mean any privatization, but it could mean that state sector companies can be restructured and brought in so that they can raise both debt and equity through markets, which will help them to fund without being reliant on the government. So in the interest of time, I'll just do one more slide to tell you and give you a snapshot of what it is for the future. So we just a timeline of some of the plans that we have in terms of development of the market. In terms of products, as you know, we are a one product market for a very long time. We have shares and we have a small corporate debt market. But we have now made a lot of plans and working simultaneously on multiple products that can be introduced to the market, so that the investors will have better choice and also mechanisms to hedge their risk. So for example, we have just introduced a repo trading on corporate debt. We have also introduced a multi-currency board so that local listed companies can raise foreign denominated capital. We are working on a gold product with the banks to come up with a gold product. Last year, the Securities and Exchange Commission gazetted rules for REITs, that's a real estate investment trust, which could prove quite popular in the local context simply because real estate is in demand. We are working currently, we moved to what we call, I won't have time to explain all this, but we moved to what we call a delivery versus payment, which can facilitate stock borrowing and lending, borrowing of stock and lending of stock, and regulated short selling as well. So we are working on both those initiatives, which can mean for an investor that it's not only when the market is moving up that you can make money, but even when the market is dropping, you can sell short and still make money. So that's another opportunity that will be created. And so these are some of the new products that we have planned. And then in terms of infrastructure, we are strengthening the infrastructure to come up with what we call a central counterparty system or a central counterparty guarantee, where we will bring in a clearing corporation to guarantee shares to every buyer and guarantee funds to every seller. So that's a mechanism that's used globally to instill a greater confidence in the market on one hand, and also to reduce the risk of default. So this is one key development that we are currently working on, and within the next 12 to 18 months, we're hoping to bring this in as well. Then in terms of demutualization, it's a new term. A lot of people don't know this, but if you look at the stock exchange itself, it's a company limited by guarantee and somewhat under the control of stockbrokers. So traditionally, what all stock exchanges have done is they have converted this company, which is a company limited by guarantee, to a company limited by shares. So we are also working to convert the stock exchange from a company limited by guarantee to a company limited by shares. Now, why you want to do that is to separate ownership from trading rights, so that the stock exchange itself will become a far more independent organization. And then certain key changes will be made. For example, the board of directors, a majority, will be independent, as against the current structure where a majority of the board is appointed or elected by the stockbroker. So that we'll have independent directors forming the majority, and the chairman, currently who is a broker nominated chairman, after the demutualization process, we will find that an independent director will be the chairman of the exchange. So giving broad basing and probably more reflective of a broader audience as well. So these are some of the plans that we have, and of course continuing the digitization and technology upgrades, bringing in artificial intelligence, etc. as well. And of course the next generation products like derivatives, once the central counterparty system and all is in place. So with that, I think I'll stop, because I think my 20 minutes is up. I do hope I didn't go too fast, but wanted to give you a quick flavor of what the market is and what our plans are, and to give you a bit of flavor on some of the challenges and opportunities. So maybe I'll stop there for now. Thank you very much.
Yeah, thank you very much, Mr. Bandaranaike, for that session on this investment of the stock market. And I think you are doing a great job during the last year, when the last few years, when the pandemic also had the hit to the country. So there was one small question, what I think you can give a quick answer to this. There were some participant was asking whether we have access to invest in foreign companies through the Colombo Stock Exchange. Any thoughts on that at the moment? I think
not really.
Yes.
We cannot access foreign markets. The only foreign flavor is what I mentioned. We have come up with a multi-currency board.
Right.
And we are encouraging local companies to issue shares which are foreign currency denominated. So that anybody who has exposure to dollars can invest in dollars and then keep the money invested in dollars, and the returns also will be in dollars. There is no conversion.
Yes. Yes, thank you very much. Again, thank you very much. And I think you are returning back to Sri Lanka today. So have a safe flight, sir.
Thank
And you can continue to join us with the panel, or then you can exit also, sir, because you have to travel.
Okay, no problem. I'll hang on a little while. Thank you very much.
Yes, sir. Thank you. So moving on to our main topic area also, like towards a new normal, understanding the business opportunities. Like we saw that there were so many, we experienced a lot of impact on our economy during the pandemic area, when in 2019, when it was primarily identified. And anyway, at the moment, we are very much happy to say that we have controlled the pandemic to a major extent. And I think even we have come down to the 74th position in the world ranking. And at the moment, we have less than 10,000 active cases being treated also, and daily cases also are coming down. So therefore, we have successfully controlled it at the moment. But nevertheless, a lot of businesses had impact during the pandemic, and it continues to be there. So I think we have a very good panel comprising of all sectors, many disciplines. So just to give a brief introduction to our panel, to start with, we have Dr. Kenneth Gizilwa. He is the current chairman of Lanka Clear, and he has his doctorate from the Colombo University, and he counts over so many experience in the financial sector. And in addition to that, he holds many consultancy positions in the in PwC and many other companies too. So then we have Mr. Priyantha Ranasinghe. Thank you very much, Dr. Kenneth, to accepting our invitation. Then we have Mr. Priyantha Ranasinghe. He is serving as a Director of Human Resources of Coca-Cola Beverages Sri Lanka Limited, and counts over 28 experience in the field of human resources management, having held a senior HR position in Sri Lanka, Indonesia, India, and Malaysia. He has a master's in business administration from Ashbourne University, UK, and National Diploma in Human Resources Management from IPM Sri Lanka. He also possesses a postgraduate level certificate in HR Management from the Postgraduate Institute of Management, that is PIM, University of Sri Jayawardhanapura, and he has a lot of qualifications and other experiences to his title. And he received a Global HR Excellence Award from India in 2013. So welcome, Mr. Priyantha. Thank you very much for accepting our invitation. Then we have Ms. Tilanka Abevadana. She is an international marketing professional with 15 years of experience in strategic marketing management with geographical exposure ranging from Sri Lanka, UAE to emerging Asia markets. She's currently working as the Chief Marketing and Business Operations Lead for Southeast Asia emerging markets at Microsoft, responsible for 9 Asian countries. She was recently recognized by the Women in Management in collaboration with an international finance corporation, that is IFC, and Australian government at Women Top 50 Professional Career of Women Awards in 21. So, and she was the president of the National Body for Marketing in Sri Lanka, that is SLIM, for the year 2021 and 2022. So we are very much honored to have you, Sri Lanka, in our panel. Then next we have Mr. Prasanna Liyanage. He holds a BSc engineering degree from University of Moratuwa, having acquired over 17 years of experience in information technology, media, advertising, and event management with overseas and local trainings. And he has a MBA from Clifford Metropolitan University of UK. I think he has a very vast experience in this area of e-commerce and IT. And currently he is the Managing Director of Reflections Holdings Private Limited, which is into media, advertising, and other digital marketing and training hub of Asia, the online education. And he is the current IPP, immediate past president of Colombo Chamber of Commerce, and the founder director from board director from Federation of Chamber of Commerce and Industry of Sri Lanka. And he is known as a keynote speaker in many forums. I think he's a very famous character in that area. In addition to that, he conducts lectures from many universities in Sri Lanka. Last but not least, we have Mr. Channa Gajanayaka. He is a senior lecturer at the Department of Entrepreneurship at Japura. And his academic qualification is he has a MSc in Management Faculty of Graduate Studies in University of Sri Jayawardenepura. And he has a BSc Business Administration Special Honors degree from the Faculty of Management Studies in Commerce at same University of Sri Jayawardenepura. And he has many certificate areas in higher tech, higher education and other areas. And he has research interest in entrepreneurial intention, dynamic capabilities, and strategic management, and so on. So thank you very much, Mr. Chandra, for joining our forum today. So I think, so given the qualifications and the experience together, we have a very much experienced panel today. So just to start off the things, so I would like invite Dr. Kenneth. So you can give us a briefing about how you see the situation now and how it was about 2 years ago when the pandemic started, and where are we now? So, Dr. Kenneth, the forum is yours. Yes. You are muted, sir.
Right. Thank you, Indaka. Thank you for the opportunity. So I will pick up from where Rajiv was stopped in terms of looking at the overall investment climate, which we see predominantly reflected in the stock exchange. And many do say that the stock exchange reflects the true investment appetite on the ground and the risk appetite of the country. So within that context, if you look at what happened prior to where we are now, I think the whole economic structure was changed in terms of how we want to go about in the overall macro side of the economy. And as a result of that particular policy shift, we saw a stabilization of interest rates at a single digit. And that helped the overall stock market to be rejuvenated and recapitalized to where it was from before 2019. In that sense, the overall framework was supportive of more capital formation. I say this because people seem to misinterpret local low interest rates in the local market context as not conducive for savings, because it's predominantly looked as savings from an individual perspective and not from a corporate balance sheet point of view. And therefore, people want to see higher interest rates, and that has been the appetite for Sri Lanka over many decades. And that particular interest rate structure is not conducive for investment, and neither is it conducive for local capital formation, because most investors are not incentivized to take on long-term capital formation because of the overall low NPV values that you get as a result of high interest rates. And as a result of that, you get lower IRRs. Now, that has not yet sunk into the overall mindsets of Sri Lanka, and we still continue to clamor for high interest rates, which is a sad part of our economic outlook. But I think in 2019, we took a conscious decision. I think many of us who were in discussion at the central bank wanted to stimulate the local economy to ensure that we help local businesses recover in 2020 after they suffered a series of shocks, both internal and external, and also saw their returns and their earnings decline, plus their overall debt servicing increase, which was significant in their overall free cash flows. And therefore, any form of investment was not possible given the double-digit interest rates that we saw and also a depreciating currency. Now, that particular journey was short-lived, as we saw from 2020 to 2022 to where we are. Interest rates remain at a single digit for two reasons. One is as a policy measure, and secondly, due to the demand compressions as a result of COVID and the global slowness that we saw. Now, during this particular period, we had a lot of great news in terms of the overall stock market performance despite COVID, and that helped the investors gain confidence because there was price stability and there was some sense of direction in the overall structure of the economy, where we were looking at enhancing production and enhancing our industrialization journey. For these two particular macro variables, industrialization and production, you need price stability. And I think that price stability environment was created and it was maintained only for 2 years, which is not sufficient to see significant results, even though we saw short-term results come through in terms of the expansion in poultry, dairy. We saw great news on the fisheries front. All that was kind of building up well. And then we had COVID. Despite COVID, I think the agricultural sector did well, because if you look at compared to the regional peers, Sri Lanka didn't do that badly, and you compare to some of the global economies, Sri Lanka's contraction was not that bad, right? And in 2021, we saw a growth pick up back again, and we reached a growth rate of about 4%. And we were expecting this particular trajectory because of the low base. Once we get back to that 15 trillion mark, we're expecting Sri Lanka to continue its growth trajectory and to take on some of the headwinds that were coming from the commodity space, particularly because we have a large import bill, and 25% of that import bill is fuel and fuel correlated imports, which is quite significant. And we were looking at pressing people to actively look at to manage their price risk on the balance sheet, but that didn't happen. Because when you have a global contraction like that, there is opportunity, and that opportunity doesn't come very frequently. And Sri Lanka missed that golden opportunity despite the significant calls we placed on policymakers, the central bank, the private sector to engage in price risk management and to make use of long-term contracts to ensure we locked in the supply side and we insulated the economy from external shocks. However, those calls were not heeded, and we are in 2022 and we are paying the price for not heeding those calls. And we are currently having one of the greatest shocks, external shocks that we're seeing, which was last seen in 2009 when oil went to $135 a barrel. And we are similarly now faced with a situation where oil is above 100 and it's at 121. So the opportunities were missed. Going forward, I think we will see more turbulence in the overall economy because price stability has moved now away from price stability to price instability. And that pass-through shock of multiple variables, including the exchange rate shock, external commodity shock, plus the global freight shock, and still other commodities, excluding oil, are extremely high. And we will find that pass-through coefficient coming through into our inflation index as well. We will have galloping inflation. I've mentioned this in a couple of my articles, the depreciation and why the trade-off between depreciation and price stability. Unfortunately, we have chose the path of passing on that shock by way of adjustment of the exchange rate onto the real sector. And those pain points are now coming through because we are seeing rampant rise in inflation. And with that rampant rise in inflation, knowing the monetary policy outlook is fairly predictable, and we will really go back into a double-digit interest rate scenario. It has already happened. The long bond has already adjusted to 17%, which is not healthy for the economy. It's not healthy for the stock market. It's not healthy for the capital formation. Neither is it healthy for investors nor the consumers. And therefore, the pain is only going to increase as I can see it now, which is a sad part. And I think the stock market will be under significant pressure going forward. And I have forecasted the stock market index to probably come down to the 7,500 mark in the short term before you see any corrections. So that's the kind of backdrop we are going to work with. I'm going to leave my brief analysis of the current climate for now, and we'll take further questions after our presentation. Thank you once again.
Thank you, Dr. De Silva. Actually, you gave a good analysis of the current situation, standing from previous situations what we had. Actually, Sri Lanka has missed on many opportunities. I think when the tsunami hit, also we had the opportunity, and when the war ended, we had a situation. Actually, yesterday, Professor Wu was also speaking about the waves that we have during a lifetime. So, and I think Professor Sampath Amaratunga also, I think, touched upon what we should be doing. So when those waves happen, like whether those opportunities, whether the country can take it or not, that we have to be very much looking at. So anyway, we'll see. We'll hope for the best and coming forward. So Prasanna, sorry, Mr. Priyantha, I think you are into HR areas. So how do you see this? Are we getting back into the correct path from the HR perspective, or are we still behind, or what we should be doing? So if you can give some insights.
Okay. So thank you very much, Indreka, for inviting me. I'm representing actually CIPM, and so I'm the treasurer of CIPM, and I take this opportunity to thank my president also, Mr. Jan Thamasinghe. He's the one who nominated me for this session, and also I'm working for Coca-Cola as the HR director. So yes, I'm a people management practitioner. So the people management landscape has been changed drastically after the COVID-19 pandemic. We all know that, but it has given us an opportunity for us to revisit our people management practices, because the human resource management itself, it's one of the most important areas in the organization, and also one of the most important resources in the organization. So if you consider HR is the most important resources, then it has to be handled very carefully and in a very empathetic manner. So, and it has given us an opportunity to inculcate the people first culture in the organization. I'm not saying that it wasn't there, but after the COVID-19 pandemic, it has really given us an opportunity to inculcate the people first culture, right? Do we really consider people is the first priority? So that is something that we have to discuss here. So for that, in my organization, we came up with a leadership model, right, to look at these areas. In this leadership model, we looked at three main pillars. Number one, if you are going to be a people leader, a manager, or a senior leader, or even a director, even a line supervisor, you should be the role model. You have to be a role model where that you can gain more acceptance. You have to do what you are saying, right? And also, being a leader, you have to set an agenda, because this is after the COVID-19 pandemic. So everybody wants somebody's helping hand. So everybody is, looking at the leader's perception, the leader's guidance, leader's helping hand. At that time, the leader has to set an agenda for his team. The next one, the third pillar, is help people to be their best self. After this COVID-19 pandemic, people, expect a lot of, help, training and development opportunities, COVID-related assistance, and also certain other, areas where that they need to be, taken care of. For that, we again looked at 6 main pillars. If you are going to look at this, people first culture, then we have to talk about the leadership. What about our leaders? Do we have real leaders who are future ready, right? We are looking at a future ready organization. Are they really ready to take up challenges? Because as I told you at the beginning, the people management landscape has been drastically changed. If so, are our leaders ready to take up the challenges? So therefore, again, we have identified 6 main areas, calling out 6 leadership game changers. Start with lead with empathy, right? We being HR professionals, we have to, we all know that, one size doesn't fit all, right? So therefore, we have to have the empathy. You have to, look at the issue in your eyes also before making a decision, people-related decision for somebody else. So that is number 1. Number 2, lead in a network. We are, very much networked with other countries as well as within the society and other stakeholders. When you lead a team, you have to look at leading in a network. The third one is lead for simplification. We all know that most of our organizations, there are so many processes, red tapes, guidelines, and approvals. There are so many complicated processes. So we looked at everything to simplify, where people can be their best selves, right? Simplify to increase the efficiency, simplify to increase the productivity, simplify processes to speed of execution. So that is one of the areas that we came out with as one of the leadership game changers. The fourth one is one of the most important one after this pandemic: lead with recognition. People would like to be appreciated. People like to be rewarded and recognized. So therefore, we came out with a reward and recognition scheme, right? Let it be financial or non-financial. But when you implement a reward and recognition scheme, each and every employee in an organization gets an opportunity to apply for it and also to be rewarded, right? And it creates high level of engagement as well as motivation. The fifth one that we identified was lead for everyone, right? Lead for everyone. We have leading others, leading leaders, leading yourself. When you lead for everyone, you can easily convert what is in it for me to what is in it for us. What is in it for me to what is in it for us. So therefore, we came out with concept called lead for everyone. And that has given a lot of very good results. Our engagement score has, after this COVID-19 pandemic, globally, we conducted an employee engagement survey. It is globally 92%. Right? Earlier, it was about 80s. So that means we have really worked hard on that as a team, and it has given the desired results. The sixth one is the last one, but very, very important one: lead with radical candor. It is all about honesty and integrity. Bring the authenticity to the table, right? When you are, talking with a lot of honesty and maintain highest level of integrity on your organization, the degree of acceptance is greater. Being a leader, being a people leader, being even a line manager or a director, or even a supervisor, if you maintain highest level of integrity in the organization, there will be a highest level of degree of acceptance. So that has really given us the opportunity. So during this pandemic, so these are the main leadership game changes that we worked out, and it has given our desired results. And there is some more to do. And also we are working on those things. So as an introduction, I will stop here. But
thanks, Priyantha. I think yes. Thank you very much, Priyantha. I think you gave a good explanation about the human side of it. Actually, the leadership qualities, what we should be having, is very much required at the present context also. So, and in addition to that, you touch upon the leading of everyone. So those are the things that we should be looking at. Now, yesterday when Mr. Kotler, Professor Kotler also was explaining, he was touching on the marketing 5.0, where the marketing technology for humanity was being explained. So Tilanka, I think you are from the marketing discipline, and how do you see the present context? How are we on the correct now? How should the marketing change to suit the new normal situation, what is going on maybe globally and Sri Lanka? Yes. You are muted, Tilanka. Yes, thank you.
Yeah, thank you, Mr. Indraka. Firstly, thank you for the invitation to join this esteemed panel. And in this conversation, I'm mainly representing the profession of marketing as the immediate past president of the Sri Lanka Institute of Marketing, whilst I serve also, whilst I am also an employee of Microsoft. So coming to your question, Mr. Indraka, let me start with two interesting facts and, talk through that. So I extracted these two from a recent Harvard Business Review article, which says 10 truths about marketing after the pandemic. But I'm just going to pick two and then let me talk through that. So the old truth used to be that organizations are actually competing with your competition. So that means the businesses or the organizations used to think they're actually competing with their businesses or competitors. But the new truth really is that you are competing with the last best experience your customer had. So actually, gone are the days where you are actually competing with your competition, but your real competition is yourself, where you're competing with the last best experience your customer had with you. And also, the next point that I'd like to add before I further elaborate is, earlier are the days that we used to say the brand we should stand behind great products. But now, I think as Mr. Indraka, you mentioned, even Professor Kotler mentioned, you said in his keynote, that is, the new truth is the brands really have to stand behind great values. So that's really where the world is moving. I think even the current context, if you look at even where Sri Lanka is and even the world is, any brand who genuinely can stand for a purpose, you will never run out of customers or consumers for you. I think gone are the days where you had like beautification of your campaigns and you have a tagline and you thought marketing was that. But actually, gone are the days, and now it's really about making sure you have a proper value or a purpose that your consumers get behind. Sorry, can you hear me? Yeah.
Yeah, we can hear you. There was a small interruption. Sorry. Go ahead.
Okay. So I think those are the 2 points that I'd like to speak through, Mr. Indraka, because if you really look at with the pandemic, the brand loyalty was challenged. People really had to go ahead with the availability versus the brand loyalty that they have been building. So that gave an opportunity for consumers to switch. And in such a situation, or with this situation that's been created, your higher purpose is so important than anything else, I would say. Earlier, people used to think having a vision and a mission was a mere bunch of words where it's like it's beautifully hanging on a wall. But that's not how consumers are going to demand you, because the consumers are really going to use social media and challenge you, even create a wave against a brand if you're not really fulfilling, or rather if you are really being an unethical brand. So I think the current context or what pandemic has created is, it was already always there, but I think the pandemic accelerated it, where the brands are being held to a very high purpose. So I think that's the first trend, or the first thing I would say marketers have to really watch out to be very authentic marketers. I think authenticity, I think even earlier, even Mr. Priyantha mentioned about it, even in the leadership, the empathy, and also the importance of this, even the importance of being authentic leaders. So similarly, I think the marketers have to be very authentic marketers. Your consumers will hold you into very high grounds. So that being said, it is also important that you have to think of your customer journey with the automation. I think that's why people say with the pandemic, the 2 years during that period, the people who never made a purchase online made their very first purchase during the pandemic. In the last 18 months, people say they made their first purchase during the pandemic. So though the pandemic may come to an end, like we will hear that day that's saying, okay, we are no more threatened by COVID, we need to remember one thing, that the behaviors we acquire, the skills we acquire, the way we do business, this is going to stay. So I think that's the most important thing as marketers we must remember. So the pandemic may come to an end, but the way we do business, the way we run organizations, the way entrepreneurs run business, this will remain, this will stay. So that's why digital transformation is no more going to be an IT function. It is not. I think marketers have a huge role in driving or championing digital transformation for your organizations, because you are at the heart of your customer's journey. And this is not only about beautifully doing campaigns anymore. It is really about making sure you understand the end-to-end journey of your customer and really understand the importance of marketing automation. And also, let me again remind what I said at the beginning, that is, your competition really is you, because you're actually competing with the last best experience you gave your customer. And the moment that you give them a bad experience, that's the end of it. They're not going to think twice to challenge you. They're not going to think twice to hashtag something and publicly, humiliate a brand or even tell you that you are doing something wrong, because that's the era we live in. So because of that, I also believe, I think these two factors, mainly about I think since this is the introduction, I'll just focus on these two. So the first one being very authentic marketing. You need to have a purpose that you truly believe. You can't put a purpose in front of your customer just because it's a beautiful set of words. You have to truly believe. From your product, from your marketing mix to everything you do has to be, you truly believe in that purpose. And secondly, the marketing automation and the customer journey is so very important. Your customers are going to expect you to know what they want. Your customers are not going to just assume you know, your customers are going to expect you to know. So I think with that, I think the tech knowledge or the IT knowledge, the digital knowledge, this is not only digital marketing I'm talking about. I think knowing your customer, knowing the customer journey, these two things are going to, I think I can name a lot, but I think these two things really shape the profession of marketing in the post-pandemic era. But I think this being the first question, I'll stop at that. Mr. Indra, I think as we go, we can discuss more.
Yes, I think thank you very much, Tilanka. I think you gave us a good explanation about how important the marketing at the present era is. Actually, with the COVID, I think we had to leap into about more than 5 years ahead of how we do marketing, how we do transaction, how we do business. Actually, I could remember the last slide of Professor Kotler yesterday. He was saying that if you are in the same business of within another 5 years, you will be most probably out of business. So I will next like to move into Prasanna. I think Tilanka was talking about, Ms. Tilanka was talking about how important the technology is and how we can use the technology for the marketing activities. I think you are from that discipline, and I think you can add on or you can take over from Ms. Tilanka how we should be looking forward on the post-pandemic era. Yeah.
Yes, I'll take it forward from my good friend Tilanka. Actually, she was explaining about how customers are demanding. That's one key point. And also she was talking about this, the knowledge cycle, the whole customer life cycle, right? So what we see here is a personalized economy where customers is partly driven by the increase in online purchases and so on, right? So we are tend to most of the economy, the companies are trained to omni-channel sales strategies where you can have the brick and click kind of a thing. And they are trying to do it with the competitive battle to win over other brands, as you say, right? And also, same time, as she correctly mentioned, the digitalization offers organization the possibility of using the analytics to gain more insights into the entire customer journey. On the other hand, the consumer seeks a personal approach that responds to their unique needs, regardless of channel or whatever the way they are using. So, however, the shift toward this on-demand app and the economy calls for an evolution of the shopping experience, complemented by digital development like artificial intelligence, virtual reality, all these things. The omni-channel shopping environment become even more personalized, right? So then the accelerating development in personalization of customer journey offers many opportunities for organizing. That's what I wanted to emphasize. And other is actually emerging area is this concept of responsible consumerism, right? This means that people not only aim to live healthier or stimulate the local economy opposing the globalization we have seen during the pandemic, but also they have more insights on origin of their foods and goods and so on. So therefore, technology plays especially in agriculture and so on, a very key aspect on developing new products, innovations, and so on. And also another area of huge technology boost is biotech. We have seen the people are increasing aware of the health and methods of overcome diseases, disabilities, and so on. And technology embedded in biology reshapes the playing field in the medical institution. That's one aspect I want to tell. And also at the same time, telling all these aspects, the increasing continuous friction between this trust and distrust was really there, right? So building trust among citizens has always been a very crucial, important for both business and as well as the government institutions. for the businesses, trust is a very key long-term profitability, while for government, trust is very important for societal stability, right? So then what we see with that, the privacy has become the next unique selling point or USP. So privacy is increasingly incorporated in organization daily practices, not like those days. That's why we are seeing like many emergence of data protection regulations, and those things are coming up even in Sri Lanka. So we are looking into that. However, what we see is like mostly now the technology and everything and the consumers are revolving towards the next generation, this high value platform we call, right? So because we are connected with each other all over the globe. So the business is basically based on the network. So then next step is to leverage the untapped potential of this true engagement and making valuable connections where we can expand the businesses. So this is actually gives us a signal for the next generation high touch and high tech value chains. Those things are now creating a little with this network and technology platform. So that is one thing. Like if you see like even the LinkedIn, Facebook, Instagram, Amazon, and all the platforms developing are into that. So ultimately what I wanted to focus and what I want to tell is like this all in all should come in to make some meaningful business models where the digitalization and new technologies provide more opportunities and transparency for the consumer side, which means organizations have to move fast in order to survive. Otherwise, we can't survive. And the business models of the future can no longer be just about the profit and turnover. So business models in future should look into the flexibility, the creativity, the customer centricity, and also engagement touch points in every part of the organization. So in a nutshell, that's what I want to give an opening for our conversation. Thank you.
Yeah, thanks, Prasanna. So actually, he touched upon how the technology would help us, and actually that is the most required thing in the present context. So moving on to Mr. Channa, I think you have done a research in many areas under these industries and other areas of businesses that are happening. So how do you see that? You listen to all the panelists at the moment also. So how do you see the present pandemic and how ready are we?
Thank you so much. Good evening to all. Firstly, thank you very much, Open University, for inviting me for this valuable session. We know when it comes to the present context, today we are going through a very tough time period. We know COVID and post-COVID challenges have been intensified the present economic crisis. However, we cannot give up everything or the challenges created by this pandemic and other macroeconomic factors. We can't keep them away. We cannot give up them as policymakers or professionals or entrepreneurs. We need to do more studies. We need to do more research. We need to more discussions. We need to do more experiments in order to find new strategies and new avenues for building this economy. Actually, I thought to make a voice in favor of MSMEs in Sri Lanka in this technical forum. We know when it comes to the SME sector, it has been identified as the backbone of the economy, which gives around 45% of employment opportunities to the country, as well as it gives more than 50% to the GDP. So when it comes to the SME sector, we know it has many challenges even before the pandemic period. So these challenges and issues in the SME sector, they have been intensified by these macroeconomic instabilities and the pressure created by the pandemic. So when it comes to the strategies, applications, and all, there were many applications and practices that existed in advanced countries, but were not so popular in emerging countries like ours. Primarily, we identified them as concepts and theories, but the pressure created by the epidemic on businesses took us to new things, new practices, new strategies, so on. Now we can see dialogues, forums, encouragements, researchers on business digitalization, digital businesses, concepts like collective entrepreneurship, etc. Because of these challenges and new thoughts were started talking about in present business setting, concepts like virtual kitchens. Now we are talking about virtual kitchens instead of open kitchen and closed kitchens. Now we are talking about digital wallets instead of hard currencies. Now we are talking about platforms like Fiverr, freelancer.com, Upwork, Shutterstock instead of traditional freelancing models. Now we are talking about concepts like open innovation, ecosystems, and open innovation practices instead of closed innovation models, so on. So I think as professionals, so as academics, as entrepreneurs, we take necessary actions to capitalize these new signs which were raised by especially the pandemic. And we need to require actions to internalize them. We need to embrace them. We need to take necessary actions to internalize them. We need to necessary actions to bring them to the micro, especially micro, small, medium enterprises. Because at the moment, we need to take necessary actions to empower them, reshuffling the entrepreneurship ecosystem in Sri Lanka. Because if we take necessary actions, so if we take if we provision required strategies to boost up the micro, small, medium enterprises in Sri Lanka, we can do something in favor of bringing dollars to the country. We can do something especially in favor of providing more employment opportunities. We can do something in favor of utilizing our regional resources, so on. So I personally believe that there were many opportunities, and there are many opportunities, especially during and in the post-pandemic situation. But we need to take necessary actions to make a conducive environment for the micro, small, medium entrepreneurs, especially in Sri Lanka. If we do it properly, we can see many prominent industries with huge opportunities.
Could not agree with you more, Mr. Chan. Actually, we actually have to create a conducive environment for the SMEs, because that is the cream of our productivity if you take it at the present level. Also, what we saw during the pandemic was a lot of those areas were getting affected, but now they are getting back on their feet. So there should be some sort of environment we should be building up to help those small and micro companies which are coming up. So and you talk about how we can extend their activities onto foreign market, how we can bring in foreign exchange also. So Dr. Kenneth, I would like to touch upon that area. Actually, what do you think about the global price risk index, or how the entrepreneurs should be facing that? Are we ready for it, or is it effective now? Yes, if you can explain on that. You are muted, doctor. You're muted.
Sorry. Couple of things. One is, I don't think Sri Lanka is ready to go global. That is my personal view, because I've been working with many of the SMEs and many of the larger corporate, middle-sized corporates, and I don't think they're ready. However much we say on the marketing side, I don't think marketing and finance people are doing sufficient to change the business model, because we are bogged down with this comparative advantage doctrine, which looks only at markets within Sri Lanka. So the products that we have can't meet international standards. Our business models, our revenue models are not visited. Our cost structures are not visited. If you are going global, and we have been talking about this for donkey's years, I don't see anything being done. We have been talking at marketing seminars. We have been talking at many other award ceremonies. We have been awarding people with so-called accolades of managing corporate balance sheets well. But all these are bogus. Because if you are managing price risk well, we should have been able to manage our balance sheet risks and capitalize when the global commodity prices collapsed, and make use of that particular opportunity not only once, but thrice. Thrice.
True.
And to date, we have not done it. We are risk averse. Our finance people are risk averse. Our finance directors are risk averse. They take awards for not managing risk, which is the saddest part. So I don't think we are ready to go global. I don't think we are got a mindset that can position us to go global, because businesses need to rethink this economic model, right? We have got caught to an old economic theory. We have got caught to old economic thinking. We have got caught to old business models, and we don't look at how we can go global. To go global means that we have to have the entire supply chain and the price managed efficiently so that we can compete. If we are competing, we would have 10 Sri Lankan global brands. But as at now, we have only one. Just Google and see. I tell this to my students. Google Sri Lankan brands and see what you get on the images front. You can do it now. You will get only one brand that is out there. Others are all multinational brands like Levers, Lifebuoy, Sunlight, etc., Nestamalt, Milo, Coca-Cola. All these are shown as Sri Lankan brands. But none of our Sri Lankan local brands are there except Dilma. Google Indian brands, Google South Korean brands, Google German brands, Google Chinese brands, and see what you get. All these companies are local but global companies. So I just want to say that I am disillusioned by this whole conversation saying that we are great, that we are global, when we are not. Because I think there's a lot to be done in this area. And I think I advocate that we have to become a global Sri Lankan. But our mindsets are not ready. Our business leaders are not ready to do that. Our associations like the CIM or the AAT associations who are managing or supposed to be advising people are not ready to do that. And we have been really sleeping at the wheel. So I'm not convinced sufficiently enough, because when I talk to people in the business area, I don't see that they're managing balance sheet risk well. They don't manage a currency risk. They don't manage a commodity risk. They don't manage an interest rate risk, right? And without managing that, you can't go global. You can't be price competitive, despite the fact that we have tools.
Yeah, agreed, doctor. Actually, I think the managing of price is the main point when it comes to going global, I think. So at this point, I would like to invite our participants also. If you have, I think we have an eminent panel from many disciplines. So you can drop your questions in the Q&A chat or the chat box. So you can direct your questions also. And there's a comment also made in relation of what Doctor said, the role of marketing should be revisited and redefined in improving inclusiveness in the emerging economics. So Tilanka, I think there is a challenge for associations like us, AT and SLIM and other institutes. What can we do about this, about doctor's comment? Are we not ready yet, or are we not making enough brands, or are we not encouraging our entrepreneurs to get there? What can we do about it? Just, yeah, briefly, if you can comment. Yes.
Yes, of course. The fact or the reality is we don't create enough brands that can represent us globally. That's something that even as an association, Slim also have been trying to champion and, try and create such brands and at least inspire the brands, because there is so much an association can do. You can facilitate, but beyond that, it's really the policy and the incentives that you give and how you really, because an association cannot create a brand and make it a global brand end to end. So I have to fully agree with the doctor on that front, because look at everything that we have. I think other than a few brands that we can call, such as Dilma or Sparsilon, which are represented globally. I mean, wherever you go, you'll find a Sparsilon store, or you'll find Dilma tea where you stay. Other than that, look at the cinnamon we have, look at the minerals we have. We just export them as like white goods. We don't really add value. So that's a huge challenge, Mr. Indraka. I think there is no question about it. There is no shying away from it. That is a challenge that Sri Lanka is currently facing. But in order to resolve this, I think I'll tell you something that we recently did. So about a couple of weeks back, we brought in a discussion about the importance of nation branding. I know, a very controversial topic at a time like this, when Sri Lanka is Googled, the kind of things that you see. So you will see the audience getting divided. Why are you doing it at this time? But technically speaking, this is exactly the time to be starting such a topic, because the reality is, in nation branding, is everybody thinks it's about a nice slogan and having a beautification into the global. It's not. Actually, the nation branding, if you look at the blueprints that are available globally, the strategies, it's about policies that does not get changed from government to government, so that you have policies that remain. So even if you are to be positioned as a country, I mean, for an example, when you look at a country like Japan, what comes to your mind? And when you think of a country like Singapore, what comes to your mind? That is because what you have been built over year after year, decade after decade, that is on your mind. So I think Sri Lanka has a long way to go in terms of creating our own brand, because the consistency had been a huge issue. Even if you look at our tourism, time to time, we have changed the campaigns or the positioning that we used to do, and that is actually lacking, so that we fail. Time to time we try to change it so that we lose it. And also for our local brands, it's time that we take the mentality of it's about just sending goods. I think there are so many who earn foreign income just by exporting, but instead, if you create a brand, if you add value, if you really position something, as I mentioned in my previous point as well, where you have a purpose to what you do, so that you have, I mean, for an example, the sustainable goals, and you look at the fair trade. I mean, these things really definitely have so much value in the global marketplace. So which brands are actually capitalizing on this and using this as a competitive advantage? So I definitely have to agree with the doctor in terms of we are far behind, or there's more work to do. But the flip side of it is, Mr. Indraka, what I want to say is, in order for us to get there, inspiration matters too. So I think say, be it awards or be it whatever that you try and do, I think that is where, I mean, if you stop this, the whole system can collapse even further. But at least to keep it going, I think you have to find ways to keep inspiring. So that's why I even said we are also, even as an institute, Slim is also trying to get into the nation branding discussion, which is going to be criticized, which is going to be a challenging one. But I think
we can't totally give up on that. There may be a silver
absolutely my point. Yes, absolutely yes. My point. You can't give up, and you have to keep at it. Yes.
Yeah, to add into that, I want to stress, like in technology-wise, we had good brands, like for example, Millennium IT. Now it has become a UK brand like LSG.
Correct.
And for example, then Virtusa, now it's no more, it's a kind of a global brand, but now it's becoming kind of an Indian brand kind of thing, right? Dominated by mostly that party to tell group. WSO2 had as a more potential, and Vega innovations with Dr. Harsha Subba Singh. So those kind of things are there, but the issue is like why it hasn't gone into the next level, like what we have to find. So that's my view on that. So, but fully agree with Doctor on the global brands.
I think we are a little moving away from our core area. So anyway, it's a very interesting subject to deliberate on a different forum maybe. So I would like to get back to Priyantha, like based on the same area. Now we were talking about how branding and other areas are. Now you discussed about the conduct risk that the integrity that mainly relates to the conduct risk we are talking about in the present context of how the employee behavior. So what do you think about the future of the work readiness index in Sri Lanka? Now we are getting away with the IFC, International Finance Center is also coming up. And with all these things, how ready we are on the work readiness index here in Sri Lanka? Will the employees work in the new environment, and whether we are technology ready for that? What are your comments, Priyantha? You're muted. You're muted, Priyantha. Right.
Thanks, Mr. Indraka, for the question. So let me first give an idea and kind of a comment to Dr. Kenneth said. True enough, we are ready to go global. But to be honest, we have, global talents in Sri Lanka. So somebody, the leaders who run the country, the leaders who run the organizations, the investors, the board of directors, somebody should, create a conducive environment for people to go global, right? We have, globally competent people in Sri Lanka. So the sad part is nobody has really, created the culture and inculcated that conducive working environment for people to go global, right? So give an answer to your question, Mr. Indraka, the future of work readiness index. If we really look at after this COVID-19 pandemic, as I told you right at the beginning, the people management landscape has been drastically changed, right? So now as a country, future of work, from the readiness index point of view, are we ready? We are not there as yet, but there are, lot of, initiatives have been taken by local companies, small and medium level companies, as well as multinational companies. So that is something that we can be happy with. So when you talk about future of work readiness index, I would like to touch on three main areas. Number one is future of work. Number two is future of workers. Number three is future of workplace, right? So let me go one by one. If you look at future of work, we have to talk about how we will work, right? At the moment, there had been a way of working for many decades, but after this COVID-19 pandemic, we have been compelled to revisit and relook at how we are going to work. So at that time, we have to generate and kind of incubator for people to come with certain ideas where that, you can even reward them. If somebody is coming with an innovative and creative idea, right? Create that incubator for idea generation within the organization. So that is something that, we will look at. The second thing is enterprise simplification of work through digital enablement. I think a couple of speakers talked about the importance of the digital infrastructure as well as the digital platforms. That is very, very important. If these digital platforms and the digital infrastructures are not ready enough for our future of work to cater to, then of course we are not really ready for future of work. The next one is collaborative and co-create new capabilities to upskill, reskill, and redeploy workforce. So Ms. Tilanka also very correctly said that competition is with you. So if you are saying that the competition is with you, you have to think about reskilling, multi-skilling, and redeployment, right? So because we have limited number of resources within the organization, we have budget constraints. So we have, manpower constraints, right? So we can't, be keep on hiring people. Then definitely you have to reskill, multi-skill, and redeployment. Then only they will be ready for the framework that we are talking about, future of work readiness. The second one, if I come to the future of workers, right now we have, as I told you, we have talented people in our organization. So the question here is, as a whole, the country, the question here is whether there's a conducive environment for them to do what they're supposed to do. So that is where we are talking about future of workers. Who works with us? So we have to think about the people who are going to work with us. Are they aligned the new employment continuum with gig economy? Now, gig economy is one of the main subjects being spoken in Western world, right? Of course, in Sri Lanka, there are certain regulation point of view. Still, this has not been regularized, gig economy, part-time employment, but many countries, the local companies as well as multinational companies have started hiring giggers, right? So they will be working for a couple of hours, making a decent salary, and they go off. There's no letter of appointment, there are no terms and conditions, there's no employer, right? So that is the kind of, the future of work that we are talking about. But in Sri Lanka, the gig economy is not that popular. But some companies, as far as I know, some companies have started, but not really a formalized setup like outsourced employees, a contract-based employees or something like that. So definitely there will be certain regulation point of view, certain restrictions for gig economy in Sri Lanka. The other one is the dynamic staffing of people, teams against priorities. So this is one of the main important things when you talk about future of work readiness. Our people, have they understood their priorities, right? In my organization, we have a globally concept called work that matters most, right? Everybody has been given at least 4 or 5 KPIs based on the work that matters most. So we have done away with traditional performance management system, and we have started this regular conversation on work that matters most. So you have to have a dialogue with your manager every month, right? And you have to talk about whatever you have done in the last month, what has really impacted, how can I help you? Have you been able to deliver what you were supposed to do? So those are very, it's a very informal discussion, right? So when you have the work that matters most directly linked for your business priorities, then we can have a very good integrated approach to connect your people, the strategy, as well as the desired results. So that is the second thing. The third one is future of workplace. That is very, very important. Where are you going to work from? Are you going to work from home? Are you going to work from office? Are you going to be a mobile worker? Are you going to get a mobility contract, right? Wherever it is, right? So there are so many new concepts have been adopted for this future of work. Where are you going to work from? So number one is evolving models of purposeful workplace through digital collaboration tools. So as many speakers said about the digital tools have to really accommodate this, evolving models. There has to be some sort of assistance for people to work. Otherwise, you ask people to stay at home and work without giving adequate tools, then they will not be able to do their job. So that is number one. Number two is flexible working policy and philosophy, right? So we all know that, after this COVID-19 pandemic, about a decade ago, we were talking about flexi working hours, right? At that time, it was not that popular, right? But now everybody is having a flexible working hours and work from home, hybrid models and all that. Now this policy and the philosophy, it is very, very easy to devise a policy, right? And to implement it, but you have to have this, building a trust is more important than devising a policy and enforce it. So you have to trust your people, right? Whether they are going to work from home, from office, or from field, or wherever it is, trust your people, give them the target, and ensure that the entrusted target is done. So once you build that trust, automatically people will give their 100%. The last one is the work culture that promotes well-being, flexibility, and social capital and trust. So that is very, very important after this pandemic. Well-being and the flexible social capital trust. As I told you, you inculcate that the trust without devising policies. And well-being is, it's a very common subject we are talking about, and diversity and inclusion and equity. So that is also has to be inculcated in your main strategy. So these are the main areas that we have to focus. If we have a very candid a discussion dialogue with your employees and managers and board directors and shareholders and all that, if you can put all these places all these items in place, of course we will be ready for future readiness index. At the moment, we are not 100% ready.
Yes. So yeah, actually, we have to develop a lot, Mr. Prasanna, in that area. Monitoring and other tools has to be also developed. So I think most appropriate person to explain about this point is at this moment would be this Mr. Prasanna. What do you think the rise of social e-commerce and its sustainability in Sri Lanka in relation to Mr. Priyanth?
Yeah, actually, like after pandemic, we have seen, not only after pandemic, like throughout, we have seen even this terrestrial broadcasting and other traditional way of communication method is dying now, right? So in another 5 years time, I don't see, like, if they are not going into the digital space, like things will be, those companies won't sustain. So anyway, talking about the social e-commerce, the basic fact is building brand recognition, right? Is very vital for this e-commerce factor. So to business to be in very competitive during this battle of digital marketplace. So a study have shown that 87% of e-commerce shoppers believe that they are able to extract purchase insights from social media. So rather than, like we were talking about, like, okay, asking from a friend or family or getting opinion, rather than that, basically the millennials and the Gen Z are now looking at social media to get the insights and take their decisions. So that's where we have to think of that. Like platforms like TikTok, Instagram, Twitter, and all these things make very powerful social marketing channels, right? So that is where and we have to think of. And also influencer marketing is another area on social marketing, what I have seen. So this, most of these influencers, even in Sri Lanka, like you can see this Retta and Block and Dino and so many are coming, Vasti and so on, all these people are coming. They are very much influencers for the brands. And certain brands I have seen, one technology platform I have seen, like promoted by this one of influencers. They couldn't handle the traffic afterward that they have released this the video. Like it has got more than 1 million hits within a day, within few hours. So So that kind of trends are there. That's where the social social e-commerce is going on. Yeah.
Yes. Thanks, Prasanna. So now, Channa, going back to you now, listening to these areas, Channa, what do you think? What are the emerging entrepreneurial practices that could be seen in the post-pandemic? We saw that they are moving into the digital eras. So, what do you think? What are the emerging practices that we see?
Yeah, so when it comes to the post-pandemic situation, as well as in present context, we can see different type of emerging areas. But first of all, it requires a locally developed, a unique entrepreneurial ecosystem. So when it comes to the individuals, maybe policymakers, so practitioners, so entrepreneurs, or foreign agents, or technopreneurs. So when it comes to the individuals, we can do the things up to a certain level, but it requires a collective effort to create a conducive environment. Especially so when it comes to the modern perspectives, there's a huge recognition for the concepts like collective entrepreneurship, civic value creation, so on. So first, we need to develop and we need to establish a conducive environment for the local entrepreneurship. So when it comes to the role of professionals, entrepreneurs, and policymakers, is huge in this regard. If we can establish a conducive environment, especially fine-tuning supply chains and currency issues and other macroeconomic variables, if we can fix the issues, we can see good industries, as well as we can see many attractive areas like. So when it comes to the tourism and entertainment, when it comes to the industries, so we can think about different types of innovative business models instead of following very conventional, traditional business models and strategies. So when it comes to the agriculture thing, when it comes to the our indigenous foods and all, it requires some value addition. There should be a prime focus to these areas in terms of enhancing the depth of the value chain and all. So when it comes to the travel and tourism, when it comes to the entertainment industry, when it comes to the modern IT practice, especially freelancing platforms, so when it comes to the BPOs, and so when it comes to the value added products, especially the products that can be seen, especially in our country, we have, when it comes to the product, we have our own product range, we have our customs and all. So a value can be developed, or value can be created with our things. So there are many emerging as well as areas that can be developed, but first of all, it requires to correct the system. If we can correct the system, we can see many prominent industries and sectors.
Agree, Chan. Actually, one of the other factors what we should be looking at when you are developing such thing is the risk. That is my forte also. How the risk management should be done. So, Dr. Kenneth, what are the responsibilities of the board risk committees or the entrepreneurs? How can they manage risk when they are developing such things, or how they are managing the activities? If you can comment on that, Doctor.
Sure. I mean, first thing is, Indraka, we have to look at our revenue models, because productivity in isolation is of no use. Productivity means that you are increasing the output. Your output is your product. Your product, if it just remains on the shelf, is of no use. You have to sell it. So your market share has to be local and global. If you are looking at global markets, then your competition needs to be analyzed. Your pricing has to be well established. So therefore, your supply side, your pricing in terms of your raw material inputs, your packaging, your transport, your freight, all that needs to be properly managed. We don't take it serious enough. None of our companies look at freight. None of our companies look at the raw material input cost. They don't know it, because they either buy it from the local suppliers. Even our state entities don't know it. When I asked this question from some of these people, they said, oh, so we buy from CPC, we don't have any price risk. So I asked, does CPC pass on the shock of prices to you when prices rise? Yes, they used to pass it, now they don't pass it, right? So you can see that people don't understand price risk, right? Every minute import transaction feeds into your overall cost structure. So therefore, policy becomes critical, and therefore monetary policy plays a key role. And people shout to depreciate the currency, not knowing the impact of their input cost. Even exporters, we have shown this multiple times, that depreciating a currency is of no use, because it adds to the overall cost structure. That cost structure has to be either absorbed into your P&L. It depends whether you've got a strong balance sheet or not, or you have to pass that cost onto your product. And if you pass that cost onto your product, you become uncompetitive in an international setting where competition is managing their cost dynamically. That's the biggest problem that we have, and that's why we are not global. Everyone takes this lightly, including the central bank. It's sad, because I come from an investment banking background, plus I have an economics background and corporate finance. People don't understand this. And that's why the country is in this dire situation. We are not global. We don't manage risk. Remember that we had enough of opportunity to manage our balance sheet risk in 2009, in 20, plus in 2014, plus in 2010. We had enough of opportunities. We didn't do it. Even some of the steel companies, cement companies, they couldn't manage their MRPs. Even dairy milk, we have an MRP. So you work backwards from an MRP. When prices fell to its all-time low in 2020, people who had MRP enjoyed super profits. Now, at that point of time, they should have worked backwards and seen how best we can hedge ourselves against price risk when the global economy rises back up. They didn't do that. They went to all people who had influence and got the MRP taken off. And today we don't have an MRP on dairy milk. We don't have MRP on cement. We don't have MRP on any other products. MRP is there is not MRP is not there to destabilize or to hinder. But when you have the opportunity to capitalize on a situation where it's God sent and you have an opportunity to lock in your GP margin for the next 10 years, and when you don't do it, that's criminal, because you pass on the shock to the public. That's the same thing that happened on LPG. LP gas came down to $1.60, I think, a British thermal unit. And we didn't do anything. And today we don't have gas. And then when prices increase, you have to pass it on to the consumer. And when you pass it on to the consumer, you increase that price, or the state has to take that shock in terms of fiscal shock. And you have to absorb that fiscal shock, and then your fiscal balance goes out of balance. And when that fiscal balance goes to an imbalancing situation, you have to recover that from the consumer back again by higher taxes. People don't understand this. So that's the dilemma, and that's the frustration I face currently. So I'm really open for a debate on this.
Yes, actually, as we can discuss about it. Actually, we have missed the bus in so many occasions. Doctor, I will move away from the main topic. Actually, now if you think about Sri Lanka, like the women, actually, you are the only lady representative in the panel also. Women as a community has the ability to create and drive massive business opportunities in Sri Lanka. About 50% represent the economic input. So what are your views on that area? Just to touch upon that a little.
Yes. Thank you for that question, Mr. Indraka. So I think this is something that I always try whenever I get an opportunity. I try myself to put this out there. I personally feel that the potential of women as a segment or women as a community is still not capitalized enough. I mean, I will tell you, I mean, for an example, I think these figures may change now with the economic crisis and the pandemic, but McKinsey in their gender parity report, they say that Sri Lanka, not only Sri Lanka, they did it for the whole world, but if we just address the gender equality, I mean, without doing anything else, if we just merely address the gender equality, that means we have more than 50% coming out of the university system, well-educated women, but that is never represented in the workforce. That's about ranging between 30% to 34% every year. And when you come to the senior management, that is even lower. And when it comes to the board directors or the boardrooms, it is even further lower. So I think, so McKinsey says just by addressing that, we have the potential to add 25 billion USD to the GDP by 2025. But having said that, this is something that happened. This is a report before the pandemic and before our economic crisis. So I'm not going to quote for the exact figure, but I think the logic remains the same. That means by addressing the gender equality, there's a massive economic potential that you can add just by addressing that. So in order for more women to take part in the economy, I think the first thing I think the Sri Lanka must understand is this is no more a women's issue. The moment that you bring this dialogue, everyone thinks this is something that women need. It's about their rights, like women are protesting for their rights. But I think it's high time as a country, we must understand inclusivity is not it's not about a women's issue, but it's about an economic matter that the country has to take this as a priority so that you take the barriers off. I mean, for an example, I'll tell you a few things, simple things like having high quality daycare systems in the country. So by doing that, a mother who decides to quit after using the free education of this country and taking a degree and, going up in the ladder, but eventually decides to quit because they can't find proper daycare or like care to like safe care for their kids can be stopped. So by doing so, you're actually saving the money that was invested in that individual. And also as a domestic, that family will have a dual income. And also eventually that is going to contribute to the country's income. So I think the first point here is, Mr. Indraka, to your question, I think the country, this has to be a priority. And I think the way we prioritize women is very wrong. I mean, we always look at it as a very victim mentality, protecting mentality. You have to take care of, that is a part of it. I'm not saying you have to forget that. That is one side. But the other side of the table is you have to understand how do you unlock that potential of economic potential of women? How do you empower them to make more money for their families? And that money goes into their household, and that money eventually comes to the GDP. So I think broadly on this topic, I can go on and on, but I think the most important thing is the word policy. I think even earlier I mentioned policy is the word, Ms. Indrika. I think that is somewhere we have failed. I think again and again, we present something today and we later forget it. So I think we need policies that does not change from government to government. I don't have an answer how we're going to do this, but I think that's the way if we are to really see progress that is inclusive and that stays and that doesn't
I think we have
change.
to take it up in a different forum, Tilanka. Thank you very much for that
Absolutely.
input. I think if you think about even the foreign currency earnings, women workers in the Middle East and other areas give us a very much high, huge input. So I think, Chana, there is a question directed by Dr. Champika, Professor Champika. Can you see that? The question.
Yeah, I can see the question. So it's talking about the competitiveness of the SME sector.
With that, if you can give the concluding remarks also for the discussion today. Yes.
Thank you so much. Yeah. The question is, even though the SME sector has been identified as a backbone of SME sector, the backbone of the economy. So there are many difficulties. We are facing many difficulties in going global in terms of the global competitiveness. The question is, our policy environment is conducive to promote competitiveness of SMEs? No. So we do not have a conducive, very attractive policy environment. That is why I was talking about a collective effort for making a conducive environment. Policymakers, academics, practicing entrepreneurs, professionals, they should work together for developing a unique an entrepreneurial ecosystem which suits to the country, addressing all the issues. When it comes to the supply chain mismanagement, yes, we can identify numerous supply chain mismanagement. When it comes to the financial mismanagement, yes, we can identify large number of mismanagements. When it comes to the HR mismanagement, especially in the SME sector, yes, we can identify hundreds of mismanagements. When it comes to the tax mismanagement, yes, again, we can identify hundreds of factors. When it comes to the technology mismanagement, yes, again, we can identify hundreds of mismanagement. So when it comes to the solutions, as individuals, we can work for them up to a certain level. But when it comes to the broad scenario, policymakers, including government representatives, which directly involved in providing business development support services, they have a very huge role in making a conducive, globally competitive business environment here in Sri Lanka, fixing all the macroeconomic instabilities and inner weak areas of SMEs. So we know it requires more researchers, more discussions, more dialogues, more research, more experiments. We need to go to the ground. When it comes to the especially micro environment, no one can predict their future of their businesses. So when it comes to the budgeting, no. So when it comes to the forecasting, no. Most of micro organizations, basically they work on daily basis. Basically they think about daily routines, daily stuff. That's the nature of most of small medium enterprises as well. So it requires a system restructure. We need to take necessary action to reshuffle our entrepreneurship ecosystem to have a very competitive means a globally competitive SME sector. We know when it comes to the present context, we cannot see or we cannot identify clear barriers or clear demarcation in between countries and regions. There is a single market called a global market. There is a single platform called global platform. So we need to identify the nature of the global pressure. We need to identify the nature of the global competition, especially as policymakers and professionals. We need to take necessary as well as immediate actions to reshuffle our entrepreneurship ecosystem. Then we can see, or if we can do it effectively, we can see a globally competitive SME sector with globally competent entrepreneurs, set of entrepreneurs. That is, I think that is the need of the hour.
Need of the hour. Yes. Thank you. Thank you. Thank you very much. Moving on, Prasanna, if you can also give us some concluding remarks. What do you think about the present situation, Mr. Prasanna?
Yeah, Indreka, well, thank you. And also what I see is like as the Channa and Dr. Kenneth had mentioned, like there's no policy. That is the main issue we have seen. Even SMEs are facing, like where I'm also involved in many SMEs as a consultant. What we see is like daily basis, we are facing so many issues. Like from the morning to evening, we have to sort out those things. Like even the pricing strategy is not there, right? So today one price, tomorrow another price. Even like there's no predictive way of like having anything in predicted also. We don't know what will happen tomorrow and the next instant. Like morning one price, evening another price, and there's no policy as well, and we don't see any that kind of thing. And also there's no communication for these SMEs. Okay, this is what's going to happen. So that's the main issue I see at this moment. And it's very uncertain, but let's not touch on that side. So we'll try to see, at least in this scenario, some kind of a silver lining will be there for us to sustain. So only thing we can tell the SMEs, okay, hold into what you are doing and reduce your costs and somehow like survive this moment. Like, let's hope like we can revive from whatever we're facing at the moment. Okay, thank you, Indreka.
Thank you, Prasanna. So moving on, Tilanka, if you can give your closing remarks, what do you observe? And yes.
Yes. Yeah, I think the closing remark I'd like to add, I think our challenge, irrespective of the profession you are in, the challenge, the landscape has completely changed with the pandemic. So I think even the World Economic Forum says our skill requirements in 2025 will be half of us will be needing new skills. And also our kids will be doing jobs that we haven't even heard of. So I think the most important thing, I think we have to focus on what we can change. I think some factors we cannot change, such as the policies and everything. We can only speak about it, but we may not be able to change. But where we can really focus on is developing ourselves, having a growth mindset, irrespective of your profession, invest in the upskilling, reskill, unlearn something. So I think I would like to conclude with the pandemic, if something is apparent, I think that is about investing on yourself and being an agile person, irrespective of your profession, because the way things are changing, unless you are having a very agile mindset and a growth mindset, I don't think any of us will survive in any profession. So I think that's the message I'd like to conclude with. Focus on yourself, development, upskilling, and understand what are the new jobs and the new skills the future needs, and becoming a future-ready person.
Agreed. Actually, we'll see how the generation Alpha faces the future, who are in school now. Yes. So, yes. Priyanta, if you can have some, we can have some concluding remarks from you from the human resources perspective.
Yes, yeah. From human resource management point of view, yes, one of the comments that I would like to make here is, we have identified that the lack of a policy framework for human resource professionals as well as the human resource profession in Sri Lanka. So because of that, we have started working out a human resource policy document for the nation, led by Chartered Institute of Personnel Management in consultation with Sri Lanka Standard Institute. So that will be most probably published by end of June. I think at that time, most of the companies, whether it's a small company or conglomerate or multinational company, we can have a standard framework for people management professionals as well as people management professionals. So I'm sure, that will add a lot of value for the industries. And finally, I would like to, say, as Ms. Tilanka said, upskilling, reskilling, and redeployment, those are some of the things that we have to, keep in our agenda on the top. And most important thing is be resilient. More than the COVID, we all know that, we are going through this economic crisis, but still, trust your people and be resilient. I think then the things will fall in line. Thank you very much for this opportunity, Mr. Indreka.
Thank you very much, Priyanta. So moving to you, Doctor, like what do you think, what are the closing remarks? You can if you like, you can address the present economic scenario also a little bit for the benefit of the audience. There were some questions came up.
Right.
I didn't want to take it up, but you can, with your present involvement, you can touch a little bit and you can close the remarks also. Thanks.
Right. Thank you, Indraka. Thank you. So I'll just tell you about the economic situation that we are in. The economic situation is not good. We are facing a cash flow issue. As a result of the cash flow issue, the currency was depreciated. That is not the answer to a cash flow issue. We have seen that being the wrong policy's choice, because when the currency was 203, the stability was maintained. But now we are brought upon ourselves price instability. I think the SME is going to be hard pressed, because as one of the speakers in the panel mentioned, from day to day, the price is changing. And that's the problem with a market-based price system. In a environment where we are not managing price risk actively, this pain is going to be amplified. So for the exchange, depreciation has brought upon significant price pain, and also pain in the consumer markets. And also with that pain will come a lot of other defaults that will come about, because prices have increased by 50%. Our foreign exchange matter has not been addressed despite a 50% depreciation, and currency is still depreciating. So there is no end to that. And depreciation is the wrong choice for our country, because until we address our imbalance in the cash flow, there is no point having a depreciation. Depreciation is generally used as a tool to harness manufactured goods and not raw materials. Unfortunately, Sri Lanka is still a raw material based product. As I showed you before, we don't have a single brand out there in the world, and we have only one brand that adds value to tea. The tea industry is not in great shape. So the volatility will continue. I think price stability is going to be our key challenge. I think as professionals, we need to come together and think of what is price stability means, because everyone has been pushing, including the chambers. The big businesses have been arguing for this instability, and this instability is brought by the recommendations given by IMF. We adhered to that. For some strange reason, we have not really still learned our lessons through the multiple engagements through IMF. We have had 16 engagements. This is the 17th. And through the 16th engagements, none whatsoever has been beneficial to Sri Lanka, with an exception of 2009, 2010, where we deviated from those policies and we maintained our own price integrity and our own policy structure. So going forward, to me, I think Sri Lanka is going to be faced with significant headwinds in the coming months. I'm only worried about the SMEs, because the moratoriums are coming to an end, and with interest rates picking up rapidly, and I think there'll be another interest rate hike by at least 200 basis points, which is going to be absolutely calamitous. SMEs will be struggling. There'll be lots of defaults on the table. Liquidity will be tight, and I'm really worried about the conditions of the economy currently. And I only hope that sanity will prevail and we can restructure this economy. It's not a big effort to restructure. I'm confident that if we choose the right policy path, and many of the academics and professionals here listening today look at some of the policy myths that we have fallen into, particularly the myth of high interest rates stimulating high savings. That's a myth. The other myth is we have heard that depreciation is beneficial. It will help exports and reduce imports. That's another myth. You can look at the data to substantiate that. And there are several other economic myths that we have to debunk as a professional group. And I think that's important for the future of Sri Lanka, because we have been trapped in our own little mindsets, and we have been made to look inward than outward by the doctrine called comparative advantage. We teach that to all students and we brainwash them. I think it's time to put an end to these myths and to really dig deep into the nuts and bolts of these economic theories and understand them before we kind of advocate them on social media and at other forums without proper understanding and without proper depth. And lastly, I just hope and pray that we will not jump into the nuclear option and press that nuclear button of debt restructure. Debt restructure will be the death nail to Sri Lanka, because whatever credit outside that we have in terms of opening LCs will freeze until such time we restructure and put a credible plan on the table. So I just hope and pray, and I would urge professionals to look at other countries that have gone through debt restructuring and have still not come out of it. Because debt restructuring means the first point is that you are unable to service your debt, which is a default, at which point you can restructure. That's a long and odorous and a painful process to get about. People who don't know are talking about this, and as professionals, we have not dug deeper enough. And I think as a professional body of the university, I think it's important for you all to educate the public and educate people who have been misled on what really goes on in a debt restructuring on a global scale, which is very, very painful. So Indaka, I just hope I've just covered some of the key points in what's ahead for us. And I would want to wish every one of you, a great success. But I wish, more importantly, on the short run, I want you to be cautious, to be mindful, to be alert, to read through the lines, don't get caught to jargon, and please look at the safety of our country and safety of yourselves first. And I would beg you to discuss these matters of economic concern, because it impacts all of us here, and I mean the people's livelihoods are at stake. So I just hope and pray that we retain sanity in this process. Thank you.
Thank you very much, Dr. I think you gave us a good insight of what is going on and how we can relook at it. And it's everybody hope and pray that we don't go into that stage where we have issues here. So thank you very much again. I would like to take this opportunity. We are right on time, I think. So I would like to take this opportunity to thank Dr. De Silva, Mr. Priyantha Ranasinghe, Mr. Prasanna Liyanage, Mr. Channa Gajanayaka, and last but not least, Ms. Tilanka Abeyawardena for participating in the discussion and giving us some insight. And it was a very wonderful panel, and you all gave us good insights for the and very thought-provoking points in this discussion, more relevant. And thank you very much again. And I wish you great success, as Dr. Kenneth was mentioning. Professor Nalin, this concludes our discussion, and it's over to you again. Thank you very much.
Yes, thank you very much, Indra. I think by looking at the context of the country and by looking at the scenario, so we need to understand the reality. Because here we are talking about towards a new normal, understanding business opportunities. So whatever the knowledge we gathered once we accumulated, because I had one good experience. We have another conference in Canada, Alberta, where in the conference you have the government, say like policymakers and all, they also attended for the conference. Ultimately, after the conference, they transcribe everything, whatever the important policy making document, they are going to present for the top management. But in Sri Lanka, unfortunately, we can't see that. Even for the technical forums, we talk, we suggest certain things, but it's not comes under the literature. So I always believe this particular conference, we try our level best to transcribe what we discussed, because we started with Mr. Rajiv Bandaranayake with a very interesting guest speech. Then, as usual, I'm one of the believer and fellow of Dr. Kenneth, because he really mentioned one of the very important thing, where in his speech, we have killed our brains and our creative minds with the redundant case studies of Western countries and overlooked the transformation need of our local business. 70 to 80% of SME sector in Sri Lanka, they only talk Sinhala and Tamil, but unfortunately, we try to teach them in English. So we need to understand the reality. Now, this conference, this particular session also we conducted in English, but I think because there is a kind of a attitude that we need to change. So this is one of the very important thing. I think Prasanna also will agree with me, because he go to different places like Girandurkot and help into the poor, needy SME sector people. So we say financial literacy, I don't think they could understand. Even in Sinhala for the financial literacy, we say Mula Saksharatave, that also looks like a Kunuharapa. because Mulya Saksharata word is very difficult to pronounce. It will like burn many kilocalories of the people. So you have to talk to people like Panitha Pereira, how the cricket being socialized in one village. For the word of wicket, he actually put one nice word called Kadulla, because we have to bring that to the village. If you bring financial literacy to village with the word of Mulya Saksharata, so these things as academics we need to understand, because we even at the Tilanka, I think she explained the importance of the policy making, because now we need to have flavor. That's why we introduce Tilanka as a marketer, because we always consider marketing as a masculine subject. It's not a masculine subject. We can see now female contribution on the good example. One of the Bangladesh professor mentioned, if the Bangladesh can increase the female representation for the labor force for 10%, they can increase the GDP for 1%. So the female contribution is really important. We need to have that combination. And Mr. Priyanta Ranasinghe, I think you have done an excellent thing with the leadership and all. Yes, we need to have leaders. It should be transformational leaders, I guess, because transformational leadership, we have these 4 ingredients called, we have to inspire follower, we should intellectually stimulate the follower, individually we have to consider it, and we need to have intellectual stimulation. That part is really important. But unfortunately, now we have to understand there's a vacuum of these so-called transformational leaders, because people always like to worship the particular charisma of the people. Charisma should be there as one component, but it's only one component we need to understand. And Channa, I think I personally know Mr. Channa Gajanayaka. He's an expert in the industry and one of the scholars, because he is the one going to bridge this gap with the academic nature of the particular thing and with the expertise in a kind of a like industry perspective. So Channa has contributed a lot in the domain of the SME sector. I always feel this is one of the very good combination. So with all these presenters, I firmly believe if we can transcribe what you mentioned and whatever the implications we can present for the policymakers, then we can have a kind of a like physical outcome. So that might be the expectation. As a chair of the conference and organizing committee, I should thank everyone for your insight. And more importantly, I think Indreka, you handle with the very good chemistry. That is one of the very important area. And our Vice Chancellor, Professor PMC Tilakaratne, and our Dean of the Faculty, Professor Sivalogadhasan. Then we have Professor Champika and all the members in the faculty with our alumni. So we hope like we can have a better country with a fruitful collaboration. Thank you very much.
Thank you, Professor. Thank you, everybody.
Thank you, Professor. Thank you very much, Indreka. Thank you all.
Thank you, Professor. Thank you, everyone.
Stay safe.
Thank you. Thank you all.